most helpful for those who are building their own portfolios. But we now have a guest, of course, who builds portfolios for others. Dinshaw Irani, CEO of Helios Mutual Fund, joins us. Dinshaw, good afternoon, and thank you very much. Here's wishing you a very happy 2025 from all of us at CNBC TV 18.
Thank you, Lata, and wish you and your team also all the best. And obviously the viewers a very happy new year.
Thanks. Okay, let me continue the conversation where Nimesh left off. Where would you tweak your portfolios? Of course, portfolios don't change when you tear the calendar and change it to the next year. But nevertheless, we've seen the early auto sales numbers. It looks like small cars have done well. After a fairly long gap, we're getting good news over there. Not just autos, but is there anything that you're on the verge of changing in terms of sectoral allocation? Any sector that looks well priced?
So Lata, actually, we're very proactive in managing the portfolio. We always keep looking out for ideas and keep tweaking our portfolios. That's one thing, right? So a change in a date, the change in a date in the year is not going to make a difference to us. We've always been developing a portfolio for the future. That's one thing that I want to clarify. Secondly, if you ask me for the year itself, 25 itself, I think 24, though it started on a really good note, I think the last quarter was the one which really did away most of the gains in the market. But if you look at the overall year, the calendar year, the large cap index, which is NSE 50, I think was up some 8-9% odd. I don't see that to be a problem. I think, in fact, going into this year, maybe 8-9% is the kind of return you may just see. A high single-digit kind of return from the Nifty 50. The problem, however, will be in the mid-cap and small-cap space. And unfortunately, the mid-cap also has been identified as a market cap. Come to think of it, I think the mid-cap universe today starts at something like $12 billion. And I remember when I started covering stocks way back in the 90s, there was hardly any stock at a 12 billion market cap. So today, now imagine mid-caps coming. So it's all in your mind right now that this is a mid-cap thing. Obviously, the mid-caps are compared to large caps in their own space that they're working in. So you got to be selective in that space too. However, as an index, I don't think that index is going to do the way it did. I think 24, 25% kind of returns. And the same is the case is going to be with the small cap space. But fortunately for small caps, there's a universe is way beyond the 250. Anything beyond the first 250 is small caps, though the index is just 250 stocks. So you got enough ideas out there. So I think this year is going to be a very selective year. It's going to be clearly a stock pickers market rather than a rising tide lifting all boats.
Dinshaw, Nimesh did this poll, a CNBC TV 18 poll. I'm sure he called you too. And one of the themes that emerged is financials. Right? It's not a surprise, but 39% of them would say that this is the top theme going into 2025. The thing is, the Nifty Bank has underperformed the Nifty in 4 out of the last 5 years. And even last year, same time when we were asking our guests which would be the top sector to bet, it was financials because of relative value. So once again, it's financials, but history is telling us that banks are going through a challenging period and stocks haven't performed relatively.
So Reema, here's the thing. I was doing my analysis for my portfolio to all of my research team to ask them what we missed and what we got right. So, the top 5 sectors that moved in the last year, calendar year, were probably pharma, real estate, IT, capital goods, and I think autos, right? These were the 5 sectors which really moved. Of these 5 sectors, we were bulk of the time underweight 4 of these. And still, we beat the index for the cap. I'm talking about my FlexiCap fund. My FlexiCap beat the benchmark for the year by around 11%. Right? That's the kind of alpha that we generated. What we did get right, though we didn't get the sectors right, was the picks within the sectors. Right? So that is what matters, even in the financial services space. For the BFSI space. You can't paint all the banks in the same brush. You saw the RBI's report, right? Most of the banks had strengthened their asset basis. The quality has improved. Obviously, there's been a red flag from the RBI saying that maybe the NPAs will go up going forward in the private sector space. But the fact is that the banks that we've chosen, we've done this kind of a stress test with them that even in the worst of times, did their NPAs shoot up? Were their asset quality always a question? So you got to be careful when you pick a stock within a sector also. So I'm sure there'll be way big winners in the financial services space. And that's how we got to go around picking as such. I don't think PSUs, banks today, are going to be a fancy. Private sector will be, but again, as I said, that within private sector, avoid the ones which have disappointed in the past few quarters in terms of asset quality. And the names are obvious. I won't even take those names. You saw that with the declaration of September numbers, some of the banks collapsed 20 odd % because of the asset quality that they had, which was a questionable one. So you got to be careful here. It's, as again, I'll reiterate, it's going to be a stock pickers market, be it the sector or the market itself.
Okay. Now, I take your point. I mean, we just had SBI earlier in the morning speak to us, the SBI chairman, to inaugurate the new year. His own stock has jumped 23.5% in 2024. Bank Nifty didn't do much. It did 4%. But SBI did well. And in fact, the top 5 gainers, Karur Vaishya is up 32%, ICICI 28%, Federal Bank 28%, SBI 23.5%, like I told you, and Indian Bank 22.5%. So, you know, there have been standout performers even in an otherwise flat sector like financials. But Dinshaw, how do you look at the... see, earnings was the disappointment of 2024. Clearly, the second quarter was a shocking quarter of numbers. How do you see earnings growth both in the second half as well as in FY26?
So, Lata, our feel is, I mean, given that, again, the EOSS started way early in December, the end of season sales I'm talking about. So it's obvious that retail is under pressure, right? I mean, that's why this so early in the day, the end of season sales starting off. And once again, you also mentioned that you saw, I mean, you talked to a few people and they were saying that the destination points, which were supposed to be filled during the new year, were looking quite empty as such. And obviously, I mean, if you I don't know how many of you realize that the yesterday's celebration was quite tepid in terms of the new year that normally is celebrated. So our feel is that December also will be a very disappointing quarter. I don't think December is going to be very different from what September was. In fact, that's what my analysts also tell me. And looking at the advanced numbers, which have been brought out by a few corporates, it's not been that great in terms of consumption. Our feel is that probably March will be the quarter when things will trough out. And that also in the back of a hope that probably RBI, though it started now easing liquidity to an extent, and probably some rate cuts will creep in the Feb policy. Maybe the government in the first of Feb budget will do something for consumption. So the hope is that things will trough out in the month of March. And by the way, let's not forget that there were 48 like weddings in the December quarter, and despite that, it's not been a great quarter. I mean, that's what our feel is. So let's see how it goes. So our feel is that from March onwards, things will start looking brighter, and that also on the back of RBI's actions as such. And obviously, a lot depends on the government and the budget this time around. They have to push capex, no doubt about that. I think the bulk of the slowdown started with the government cutting back on capex and hoping that the private sector will kick in. But looking at the real interest rates, I don't think the private sectors were interested in doing that at that point in time. And I'm sure the onus lies on the government this time around. So these are the kind of caveats that one has to look at.
There was an article, I think the Retailers Association of India said that the growth in the festive period, that's October till early December, was just 7%. And it missed their expectations by expectations of a 10% growth. So clearly consumption hasn't picked up, at least not till now.
Just to add a point, and maybe, Dinshaw will know this better. Goan hotels have complained of poor occupancy. I mean, it's just a media article. I don't know the truth about it. But occupancy in Macau has soared 90%. So it could be inflation is making the difference as well. Do you think so, Dinshaw? That things have probably become a little expensive in India.
True, very true, Lata. I know quite a few of my friends who've gone to Oman for celebrating the New Year rather than go to Goa as such. And they found it like, they're saying that they probably conserve 50% of their budget by going to Oman as such. Cheaper flights, cheaper hotels and stuff like that. So I'm sure that is what's worked out. I think the pockets now are feeling the pinch, given that at least the domestic tourism is, given the high rates of occupancy, I mean, rather the ERRs as such. So.
I know there are videos surfacing online which show that Goa beaches are empty during this peak period, but the Goa tourism minister has pointed out that the 4- and 5-star hotels are operating at nearly full capacity, showcasing Goa as a top destination in India and emerging markets. Well, Nigel's there. We'll wait for him to come back and tell us. But Dinshaw, thank you for joining in and wish you, your family and the entire team at
Well,
Helios.
just an addition out here.
Sure.
That's called the K-shaped recovery. The rich are spending more, and the guys who really run the economy are not are feeling the pinch right now. So, but thank you for having me on the show.
Thank you and wish you all the very best. And look forward